Getting killed on bond funds in retirement. I manage about $600,000 for my mother, who is financially illiterate. Her money comes exclusively from selling a property during her divorce settlement. She gets Social Security and I pay her housing. She was complaining to me yesterday that she's not seeing gains in her Vanguard account. I use a lazy portfolio for her and she's about 35 equities and 65 bond funds. I just dumped this money years ago around 2019. I looked at the numbers and VTI has returned 40 for her total bond funds, and other bond funds are doing awful. With rates elevated as they are and not coming down anytime soon, I don't see the bond funds improving anytime soon. She has $50,000 in the money market fund getting 5, so anything else we can do? I don't want to realize the losses on the bonds right now since her spending needs aren't high and I support her financially. But if she has a health emergency, we will need the money. Bonds might be a good opportunity right now with high interest rates. I would hold. After bad years, you get good years. Hold on to the bonds in retirement age. They're there to generate cash flow. If a market recession happens after the Fed cuts interest rates, you could move some bonds over to VTI. In this scenario, bonds go up in value and VTI down. But remember, in retirement there is no time for recovery, so it might be just best to leave everything as is. The $600,000 is no small change, and could be utilized to turn into cash and take $30,000 per year for the next 20 years. You had some bad luck. 2022 was probably the worst year for bonds in almost a century. Investing success can really only be measured over very long time spans. You have to remember that bonds have an inverse relationship with interest rates. So as interest rates have risen, the price goes down to make it have value to someone to buy it. At the end of the day, you may be losing in price, but you're making up for that with higher yields on the bonds. Underlying bond holdings are down due to the interest rates, but they will mature at face value and be reinvested at higher rates. It's just timing. Most popular bond funds like AGG, IGSB and VCSH pay a monthly dividend. AGG is currently paying 3.02. 350K of bond funds should generate some solid, stable, monthly income. Just what she needs at 72. Don't sell these funds without some professional's advice. Friendly reminder: then rates don't have to go down for you to make up losses in bonds. Falling rates are just an accelerator. As long as those bonds don't default, you'll get your principal and interest. As the yield rises, your mother can reinvest into higher interest rates. Forget about the pricing of the bond fund and focus on the cash flow it gives your mother. I don't understand bond funds. When I look at the graphs, they drop at the same times as stocks and by a similar amount. I don't think they do what people think they do. Maybe CD ladders or actually buying bonds is better for avoiding loss during stock market downturns. This is gonna sound harsh, but perhaps you shouldn't manage her retirement. Hire someone to do it. I don't think we'll necessarily go back to zero interest rate anytime soon. But at this level, the rates will come down within a year. If you sold now, it would be a sell low situation. Just hold. You black dogs' lives matter. If you aren't an expert at retirement stuff and asset allocation, I would get a financial advisor. What in the world makes you think they are not coming down anytime soon? The media? The same media that was projecting rates would go up less than 1 in 2021. You are at decade lows on bond prices. You have the media and popular sentiment heavily against bonds. This is the time that you should be increasing your allocation. Now I understand that's unlikely for your mom due to age, but selling now is absolutely insane. Just on the fundamental side, let alone the monthly technicals, you have the resumption of student loan payments, demand falling, productivity increasing, and a potential shock of some sort setting up due to all of these hikes. I gave up on bonds. I was in a fund for many years and it just stayed flat and down for most of it. I switched to CDs with 5.3 interest rate. No risk, and I know I'm getting a positive return on my investment. I think interest rates are going to stay high for many years to come. Many news pundits over the last year were predicting interest rates would be getting cut in the second half of 2023. They've been dead wrong. If she's financially illiterate and you're asking Reddit what to invest in, no offense, then I would look at an annuity for her. With an annuity, you are getting a legally guaranteed return on your money and essentially a perpetual income. For $600K, an insurance company will provide a lifetime income for a 72-year-old. Source: I was a financial advisor. If interest rates fall again, the value of her bond funds will go up. Complaining about not seeing gains. But you're in retirement, which is where the account should be generating cash flow. It's counterintuitive. You should be collecting your dividends to pay bills at this point. Or if the funds aren't even really needed and her expenses are covered, then don't worry about it and leave it invested as it is. Not to be rude, but it appears your mom isn't the only one in this story who is financially illiterate. Holding long bonds when interest rates are going up is a bad idea. Typically taught in Finance 101. Sorry for her, man. Bonds will increase the second the Fed signals a pause. The long end of the curve will continue to steepen in the near term. With that said, municipals are a good place, but this is not financial advice. I am in the exact same position. Financial advisor put me into dissect and dissect November 2021. Literally the next day the prices started going down. I'm down $14,000 on what I paid for the bonds. Got rid of the financial advisor. Yes, I do get dividends. And they reinvest, still down $14K. I do not understand bonds at all. I read about them and the words bounce off my brainpan without penetrating. All I see are those big fat red numbers. Do I keep them? Will they ever go up and go green? Is there a time to sell? Should I quit reinvesting? I will soon be 69. Probably won't start drawing any money out of the 401k for 2 or 3 more years. You're probably confused between real treasuries and TLT when you built the port for her. From the sound of things, your mother will most likely never use this money. That being said, the risk tolerance for this money should be set to that of the heirs. It's time for a conversation with mom about who she wants to leave this money to. Then it's time to reallocate the investment. This is why I hate bonds and would never use them as an investment vehicle. I think they're absolute horrible. It's a lose-lose situation. Bottom is in. I've been managing my own IRA for over 20 years and never once seen any benefit to having bonds of any kind. They might have been great in my grandmother's time, but today they're useless as far as I've been able to tell. There are no bonds I could have held in that time that would have outperformed my portfolio of stocks and sector ETFs. People who constantly tell you not to pick individual stocks turn around and tell you to pick individual types of bonds. Might as well just spend the time and energy picking stocks, or just buy market index funds, ETFs. Bonds, not financial advice. Did you know bond funds produce interest payments? Things are turning around. Your mom will be getting $20,000 in interest from those bonds this year. Just hold them. Get a FA. You shouldn't be managing her accounts if you can't answer this question, In regards to answers, the other comments give you solid advice.